Hey guys, welcome back to another episode of Talking Money with Pete. In these videos, I go through and try and describe some general financial concepts, and I use a lot of pictures and analogies to go through and explain these concepts because I think people think a lot in pictures. And so today we're going to go through and be talking about fixed versus variable home loans. So predominantly to do with people's own home mortgages. Let's go through and get stuck in. Today we're going to be going through and talking about home loans, and particularly whether it's better to go with fixed or variable. And the short answer is there's no one best one for everybody. And so we're going to be going through and talking about the pros and cons of variable and the pros and cons of fixed, and just lots of different things that you may not have thought about or you may have been too embarrassed to ask. So we're going to just discuss why you would do one over the other and the differences between them both. So let's go through and get stuck in and talk about variable first. So with variable, the hint is in the name, in terms of it goes up and down with the market. So when the market goes down, your home loan rate goes down too. And when the market goes up, your home loan rate goes up as well. And so if you can't afford, or you get really worried or anxious about you can't afford for it to go up, and then what will you be paying? You can't afford to make those repayments. That's where fixed comes into the picture. Sometimes fixed is a bit better because you negotiate with the bank right up front and say, I'm happy to pay this fixed rate. And so you guarantee and you lock in, you're going to pay that rate. So if the market goes down, you're going to lose. And if the market goes up, then you're going to win and you've got that security. So for a lot of people, the reason they'll go fixed is to go through and get that security. Whereas with variable, they go through and they're happy to ride the waves. And so when you're negotiating those with the bank yourself, or a lot of people will go through and use mortgage brokers to negotiate with the bank or banks on their behalf, then it's about going through and seeing which ones, what's your risk tolerance, can you afford to take those wins or losses. Now, I have a pretty strong opinion on this topic myself. Keep in mind, there's no one best one, but I'm not a betting man. I don't particularly like to bet. And so in my opinion, when you take a fixed loan with the bank, you're betting against the bank, because the bank, when they're giving you that bet of the fixed loan, they think the interest is going to be that or lower, and you're betting that it's going to be that or higher. And so banks pay a lot of people a lot of money to win those bets. So most often you'll be better off with the variable, but there might be some times when you're not. And also for some people, they really want that guarantee, because you can have the best rate, you can be better ahead on variable, but if you can't sleep at night, it's not worth it. So for some people, fixed, even though they might know that it's worse off in the long run, they might be able to sleep at night, and so it's better for them. But most people with variable, I'm very strong that way because I don't like to bet against the bank. But there's pros and cons to both. Sometimes banks will want to go through and they'll need a bit of fixed income for themselves to come in. So they'll go through and do some really good fixed rates just to what they call buy business. So they've got that there and they know they've got guaranteed amount of people for a certain amount of years to keep paying their mortgages. Whereas variable, you can chop and change and go to different banks, and you're more likely to than if you're with a fixed. So sometimes fixed can be good for the bank, sometimes variable can be good for the bank. There's pros and cons to both of them. And so in terms of if you want to know where the rates are going, generally I say don't listen to whoever's on the TV talking at the moment. So sorry, Koshi, if you're listening. But if you want to know where interest rates are going to be going in the next 2, 3, 4, 5 years, a really good way to see that is, where are the banks placing their bets? If a bank is placing their bets a fixed rate for 4% in 5 years, the bank bets the interest rate's going to be that or lower. So if you really want to know where interest rates are going to be going into the future, go and see where are the banks placing their bets. Hey guys, if you found that video interesting, or you want to know more about, for your particular situation, whether you should go fixed or variable, we've got a great team of mortgage brokers that can go through and help you for your exact situation, or even just give you some pointers. There'll be a number popping up in the comment section below, or in the video below, and with an email as well if you want. And so you can have a complimentary appointment to discuss that. Also, going forward with a lot more videos, if you want to put a comment in the section below about what videos you'd like to see, we've got a lot lined up, but if you want some specifically, we might already be going to cover it, but we can always tailor it to what you guys are wanting as well. And we look forward to seeing you in future videos. Bye.